Hey, it's Ty with Credit Suite, and in this short video, we're going to talk about a topic that I get a lot of questions on, which is getting funding or credit for a business using shelf corporations. So, a shelf corporation's a paper or shell corporation that's administratively formed and then basically put on a shelf for several years to age. Now, the term shelf or aged refers to the fact that the company's already been filed and is sitting on a shelf waiting to be purchased or waiting to basically be used at a future date. Okay, so a shelf corporation is a company that was created years ago for the sole purpose of typically being sold in the future simply for the value of its age. A person forms a company and does nothing with the corporation typically other than file the annual reports and cover the annual fees. And once the corporation's a few years old, it has kind of a sort of value for the right person, in which a lot of companies actually sell these shelf corporations. So shelf corporations are not looked upon favorably by regulators, lenders, or the business credit reporting agencies. Many say they are unethical, borderline illegal, and a lot of entities even call them fraud or borderline fraud. So from Dun & Bradstreet, for example, that's the biggest business credit reporting agency, it's unclear whether it's illegal to use shelf corporations to access credit. It is clear, however, that it is deceitful, unethical maneuver that serious entrepreneurs should avoid. And that's a quote directly from D&B. Shell and shelf corporations can be created domestically or in a foreign country. Shell and shelf companies are often formed by individuals and businesses that conduct legitimate transactions. However, they can be and have been used as vehicles for common financial crime schemes such as money laundering, fraudulent loans, and fraudulent purchasing. By virtue of ease of information and the absence of ownership disclosure requirements, shell and shelf companies are an attractive vehicle for those seeking to conduct illicit activity. And this is an FDIC alert quote from April 24th, 2009 on the topic of shelf corporations. Is this practice legal? Well, our conclusion was that it was clearly unethical and possibly illegal. I understand that small business owners are strapped for cash and unable to get loans, but they should stay away from these things. If you can't get a loan from a bank, you need to look at other options and maybe even close your doors. It's a bad time, but if you can't secure capital with what your company has in assets, liabilities, and cash flow, you shouldn't try to fool a financial institution, and that's a quote directly from Business Week. So as you can see, and my advice has always been the same, whenever you're trying to do something that the credit bureaus and government agencies absolutely say they do not want you to do, it is not usually a good idea. When you are trying to do something to fool the banks, credit issuers, and business credit reporting agencies, it is also typically not a great idea because they typically are very, very well aware of what you're doing, and it can even get your credit profile red flagged and shut down. So there's a lot of negatives of shelf corporations you need to know about. For one, many lenders now look at your bank account start date as the corporation start date. And most shelf corporations don't come with an established, seasoned bank account. So this means you can end up spending thousands of dollars to get a shelf corporation with a bank or that doesn't have a bank account, and you still get denied because the lender's looking at the bank account start date instead of the actual date that the corporation was filed. Most shelf corporations don't come with these established bank accounts, which is why this happens. And some shelf corporations actually have credit issues to make it worse, making it harder to get funding, not easier. And if you buy a shelf corporation and there are negative things where that shelf corporation owes money, well, then you become liable for the money that that shelf corporation actually owns. Now, any business can build business credit. You don't need a shelf corporation to do this. Even a startup can obtain financing through business credit. So most credit issuers do not look at your time in business. They look at how many trade lines you have anyways. So when you're building business credit, which is a lot of the reasons people use shelf corporations, they try to expedite the growth of their business credit or expedite the time that it takes to get financing. But nowadays what happens is lenders and credit issuers are looking at how many trade lines you have on your business credit report as the primary driver for approval, not time in business. There's very few sources that time in business really has an impact on your approval. Most of the time it's how many accounts you have reporting to the business credit reporting agencies. Now, you can build initial credit legitimately without a shelf corporation using vendors like Uline, Quill, Gimplers, Seton, and more without having to pay for an expensive shelf corporation. And with 5 of those type of accounts reporting, you can then start to get high limit store credit card accounts with most major retail stores: Costco, Sam's Club, Apple, Walmart, Amazon. Almost all major retailers offer business credit based on your EIN credit, not your social security number, without any seasoning. You can get this 60 or 90 days in to owning a business without buying a shelf corporation. And then you can start to get store credit cards, fleet credit cards within about 60 days to 120 days once you actually start to have your store credit account start to report. And you'll have built a legitimate business credit report that won't get you flagged and shut down. This is one of the biggest problems we see with shelf corporations. It's the biggest problem that we see with buying trade lines, is that the credit reporting agencies, including Experian and Equifax Commercial, including Dun & Bradstreet, when they see that you're doing this, they often red flag and shut down your credit profile. So if you spent thousands of dollars purchasing a shelf corporation, it helped you get no money and actually got your credit profile shut down. When you're building it a legitimate way after you bought that shelf corporation, it obviously can be frustrating. So what should you do? Well, don't buy a shelf corporation. Look, you can build commercial credit legitimately without purchasing a corporate or without building a shelf corporation or buying a shelf corporation based on the steps that I just outlined here. You can also visit our YouTube channel, youtube.com/credit suite, where we give you the exact steps to build business credit, where you can start to get credit immediately for your business, even as a startup, without needing to purchase an expensive shelf corporation. And remember, if you're using a shelf corporation to try to get loans and credit, then take some of the quotes from this video, do your own research, and see what the Federal Trade Commission, what the credit bureaus, and what lenders and these other institutions think about it, and what they're doing to deter people from using it. Because in my experience, it's pretty tough to try to fool the legitimate lenders, the legitimate credit reporting agencies out there that know all about shelf corporations and how people are using them. So hopefully this information you found helpful. If you did find it helpful, well, first of all, please like this video and subscribe to our YouTube channel at youtube.com/credit suite for our full 30 to 60 minute training sessions. Because in those videos, we map out all types of financing you can secure for your business, even if you have credit issues, how to get approved for loans, how to get approved for credit lines, where to get approved. And we even map out the exact steps for you to legally and legitimately get credit for your EIN that's not linked to your social security number, even as a startup, without needing to go through the process of purchasing a shelf corporation. And we even provide 30 and 60-minute training videos on things such as buying trade lines, shelf corporations, with more information, more content, more feedback from companies like, or organizations like the FTC, banks, and such, that you could find really helpful. So please make sure you like and subscribe, and I look forward to seeing you on our next video.